Hi, Doug Jones here at Mortgage Magic. I'm a mortgage lender, and if you're looking at the news, interest rates for first mortgages are going up. And a lot of people have refinanced these past few years. They have very low rates. And so the thing you probably don't want to do right now is do a refinance and to take cash out because you're going to make your interest rate go up. So one of the things to do is an equity line. I started in lending in 1968, and the first real estate loans I did were second mortgages. Back in those days, we didn't have equity lines. We had second mortgages, and now we have fixed rate second mortgages, and we have equity lines. So I want to tell you, if you walk into a bank, here's what you're going to get: an equity line. Every bank that I know is exactly the same. They'll do 80% loan to value. They'll do a 45 debt ratio, and they need a 680 credit score. Now, one thing to note is that 45 debt ratio is computed differently at different banks. So you may get more loans at one bank than another. You might ask them up front how much money you can get. Some things to know about the equity line: it's like a credit card. It's a lien on your house. It isn't a mortgage lien on your house, but it works like a credit card. If you got a $100,000 limit, you can take $100,000 one day, pay it back the next day. You'll pay interest on the time the money's out, and if you don't have money out, you don't pay any interest. And that works that way for 10 years. So it works 10 years like a credit card, and then after 10 years, you have a 20-year repayment penalty. Now, most people either pay it off or they get a new equity line at that time, and you rarely see people doing the 20-year repayment. Realize that every equity line I've ever seen has a maximum increase to 18%. These are adjustable rate loans. The equity lines are. They're adjustable rates. They're based on prime in most cases, and they can go to 18%. I don't care if you go to Bank of America, Wells Fargo, Chase, they're all 18%. And all of them that I know of have to be owner occupied. You have to live in the house. Now, I do equity lines. If you call me and you say, Doug, I want an equity line, my credit's 700 and my debt ratio is 30 and I've got 30% loan to value, I'm going to refer you to a bank because I'm not going to be competitive in that loan. But what I can do is the banks will lend 80% of loan to value. I can go up to actually 95% loan to value. I can give you more money if you need it. The banks require a 680 credit score. I only require a 620 credit score. So I'm more liberal in my lending. The banks require that you be owner occupied. You live in the house. I can do loans on investment properties, investment residential properties, and I can do loans on second homes. And I can do those loans up to 90%. So there's reasons that I have my equity line that I can lend to you. I can do more things than a bank can do. If they come here, they're going to beat me on the rate. And I'm going to tell you that. I would tell you, say, look, go to this bank, they'll do this loan for you. And I usually know people at the bank I can refer you to. But if you need something down here, then I'm the person to take care of that for you. And I'll be glad to assist you. I'm Doug Jones at Mortgage Magic. There's my nmls number, nmls. And my email is my name, Doug Jones, 95126 @gmail.com. So hope you give me a call and I can help you.